Okay, class, we'll continue our discussion on accounts receivable. We'll start with the multiple choice questions. I hope you will take care of the exercises involving the journal entries for recognition of sales transactions involving different shipping terms, FOB shipping destination, FOB shipping point, and also the recognition of the sales revenue, whether the entity is using the gross method or the net method. For now, let's focus on the multiple choice problems provided in the textbook for accounts receivable. The first question here is what total amount should be reported as current trade and other receivables. So basically, what we are being asked of here is to identify the items that can be classified as a current asset, as a current receivable. Okay, so obviously trade accounts receivable class will be reported as a current asset, as what we've discussed before, since they arise from the ordinary course of business, since they arise from the primary activity of the business. So their collection is expected to be the realization or their collection is expected to happen within the normal operating cycle. Next would be allowance for doubtful accounts, since your receivables are to be presented at their amortized cost, and amortized cost for accounts receivable pertains to the net realizable value. So you will have to take into account your allowance for doubtful accounts as a contra asset account. Therefore, it will be treated as a deduction to your receivables. Next would be claim against the shipper for goods lost in transit in November. So our claims against third parties class will normally be considered as a current asset unless there are other information that will tell us that these are not expected to be realized within 12 months or the normal operating cycle. If the problem is silent, then our claims receivable will be considered as a current asset. Selling price of unsold goods sent by Valiant on consignment at 150% cost and not included in ending inventory. So basically, the issue here, class, is whether or not goods that are sent out on consignment will already be considered as sold. Because if they will be considered as sold, class, then the fact that they are already in the hands of our consignees will result in the recognition of a revenue and a receivable on our part. Okay, so if our answer is yes, meaning we say that goods that are in the hands of the consignees are considered sold already, then we will already recognize a revenue and a receivable. But if our answer is in the negative, meaning goods in the hands of consignees are not yet deemed sold, and therefore we will not be recognizing any revenue and any receivable. Okay, and the correct answer, class, is the latter. It is that goods in the hands of your consignees are not yet considered sold. So even if the goods, class, are no longer in our physical possession, class, even if the goods are being held by third parties, class, since the arrangement is a consignment arrangement, class, title over the goods are not transferred to the consignee. Title over the goods is retained by the consignor. Okay, retained by the entity. So in that case, no transfer of goods, therefore no sales transaction yet, therefore no sales revenue and receivable. So what then will happen in our books? The goods will remain to be recognized as an inventory. When it was in our possession, it was an inventory. When we transferred it in the hands of our consignees, it will remain as our inventory. Okay. But definitely, class, in our inventory account, it will not be recognized at 600,000. Because as we will discuss later on, inventories are to be measured at the lower of cost and the net realizable value. Okay. And the 600,000 here is not the cost nor the NRV. The 600,000 here is the selling price. Security deposit, fourth item, security deposit on lease of warehouse, 200,000. Normally, class, security deposits are considered as a long-term receivable because they would be recoverable only at the end of the lease term. And normally, considering that that this problem involves a lease of a warehouse, we expect that the lease will be for a longer period. So therefore, the 200,000 will not be part of our current trade and other receivables. So it will only be composed of our trade accounts receivable and claims receivable from the lost shipment class, but we will have to deduct the allowance for doubtful accounts in the amount of 100,000. So therefore, our answer would be alpha 2,200,000. Okay, 4-9, Jinx Company provided the following information for the current year in relation to accounts receivable. What amount should be reported as net realizable value of accounts receivable on December 31? So basically, class, our net realizable value would be our gross receivables less all possible allowances that are set up for our receivable. Okay, so let's go over the problem and determine what items here would be considered as a deduction to our accounts receivable. But the problem here, class, is that we are asked for the NRV of our accounts receivable as of December 31, and we are not given with the ending balance, the gross balance, the balance of our gross receivables as of December 31. So before we supposedly the solution is very simple, class, gross receivables minus allowances. But the problem here is the December 31 balance for our gross receivables is not given. So we will have to determine the December 31 balance yet, because what is given in the problem is only your January 1 balance. Okay, so we start with our beginning balance for our accounts receivable in the amount of 1,300,000. Credit sales, meaning sales that are on account class, sales that are not sold for cash, amounted to 5,500,000 during the year. So we would expect that we would understand, or we're expected to understand, class, that the 5,500,000 goes through our accounts receivable ledger. So if you will look at your ledger, class, you should have a debit posting to your accounts receivable in the amount of 5,500 representing the credit sales. Okay. So definitely if we have sales on account, it will increase our accounts receivable. Okay. However, we have sales return, class. So you should understand that the effect of a sales return is to reduce your receivable, class, and that should make sense. If your customer returns goods that were purchased by them before, then definitely they do not have to pay for it, and therefore we should also reduce the corresponding or the related accounts receivable. Okay, so uh, the 150,000 here sales return should be a deduction in our computation of the ending balance for our gross receivables. Accounts written off, when you write off, class, especially using the allowance method, our entry would be debit, uh, allowance for doubtful accounts, and credit your accounts receivable. And what does that mean? Since we are crediting our accounts receivable, then our accounts receivable will reduce as a result of the write-off. And that should make sense, because to write off is to write it off from our records, because to remove it from our records, to derecognize it from our records. So definitely if there are accounts that are to be written off, then our total receivables would definitely be reduced as well. Collections from customers, will this have an impact on our accounts receivable? The answer is yes, because the realization of your receivable will happen when you make collections or when our customers pay. Okay, and that is exactly what we mean by collections from customers. And if you want to analyze it by looking at the entry, class, when you receive payments from your customers, class, your entry would be debit, cash, obviously, and credit, accounts receivable. Okay, since it is already received, then therefore it is no longer receivable. So the collections from customers here will be a deduction in our determination of the ending balance of our account receivable. Okay, so far we have 1,300,000 beginning balance plus the credit sales of 5,500,000. Then deduct the sales return of 150, deduct the write-off of 100, and deduct also the collections from our customers of 1,500,000, 5 million. So that would give us, class, the ending balance per ledger for our accounts receivable at the end of the year, uh, in the amount of 1,550,000. Okay, but that is not the answer yet because the 1,550,000 represent the gross value of our receivables. We are asking class, or the problem is asking us for the net realizable value of the accounts receivable. So again, as I mentioned, the gross balance or the gross receivable less all allowances. Okay, so you can set up an allowance for future sales returns, and you can also set up an allowance for future accounts that may be written off. Okay, and in this problem, we determine the estimated uncollectible accounts by using an aging schedule, which will be discussed in the next chapter class. But what you have to remember now is that these allowances will have to be deducted from the gross balance of our receivables to arrive at our net realizable value for the accounts receivable. So the gross balance was 1,550,000 less the allowance for doubtful accounts in the amount of 250,000 and less allowance for sales returns in the amount of 50,000. The net realizable value for our accounts receivable in this problem would be bravo 1,250,000. Next, rupture company. In this problem, we are asked as to what amount should be reported as accounts receivable before the allowance for doubtful accounts on December 31. So let's go over the given in the problem first. Accounts receivable beginning 1,300,000 credit sales. So this would tell us class that again we will have to solve for the ending balance of our receivables. Collections from customers excluding recovery 4,750,000. Okay, and this is important class because when there are write-offs class, it's possible that in the subsequent periods, those accounts that you have written off, those accounts that you have considered to be uncollectible already, may actually be paid by the customer. Okay, and in some cases, problems would include the recoveries class, the payments made by customers of defaulted accounts as part of your collections from customers. But here, the problem is clear that the collections from customers exclude recovery of previously written off receivables. Okay, that's what is meant here by excluding recovery. Okay, you have accounts that were written off, but subsequently they were paid. Okay, and there's an issue here because in our books there was no receivable anymore because we have written it off. So what do we do when there is a subsequent payment by a customer of a defaulted account? First, we will re-establish the accounts receivable and record the collection. Okay, accounts written off 125,000 of accounts written off in prior year. uh, Customer credit was not reestablished. Okay, so basically, what this 25,000 is telling us, class, is that we did not recognize again the receivable that we have previously written off. We just uh, immediately recognize the cash and charge it against the allowance for doubtful accounts. Because again, supposedly, class, when there is a recovery class, when there is a collection of a previously written off account, again the procedure would be uh, the comprehensive procedure class would be to first re-establish the receivable. Okay, so again, what happened before? The receivable was written off, so the receivable no longer exists in our book. Okay, then comes now the customer paying us. How can we receive this cash from the customer when we do not have any receivable? So what are we supposed to do? Re-establish the accounts receivable. So you debit accounts receivable and you credit allowance for doubtful accounts. Okay, all movements involving written receivables and their subsequent through the allowance for doubtful accounts. So our entry class will be debit, accounts receivable, and credit, allowance for doubtful accounts. The purpose of the account is to re-establish the receivable. Okay, and in the same date class, you will now recognize or record the collection. So debit, cash, and credit accounts receivable. So you will prepare two entries: debit accounts receivable and credit allowance for doubtful accounts, and debit, cash, and credit accounts receivable. Okay, and if entries class, you can actually simplify them class. You can actually just prepare a single entry because the debit to AR in the first entry and the credit to AR in the second entry will just offset one another. So sum would simply debit cash and credit allowance for doubtful accounts. And that is what was done in this problem when the problem states that customer credit was not reestablished. The estimated uncollectible receivables per aging at December 31 is 165,000. Since the problem already told us, class, that uh, we are looking for the balance of the AR before the allowance, so we will not yet deduct the allowance for doubtful accounts of 165,000. Okay. So basically, in solving for the ending balance of the accounts receivable class, we would start with the beginning balance of 1,300,000. We will add the credit sales of 5,400,000 and then deduct the collections in the amount of 4,750,000, and you also deduct the accounts that were written off in the amount of 125,000, thereby giving you a balance of 1,825,000. Okay. If you feel that the discussion is very fast, class, you can just replay the recording, class. 4-11, what amount should be reported as trade accounts receivable? Okay, so take note, class, we are looking for accounts receivable that are related to trade. Okay, so basically, this falls under the kind of problems that I've mentioned before. That the only task on our part is to identify which one will form part of the item being asked in the problem. So here we are asked to determine which of all these items will be part of our trade accounts receivable. Okay. First, accounts known to be worthless, because obviously it should no longer be reported as a receivable, so it should not be part of our trade accounts receivable. What do we do with worthless accounts? They are supposed to be written off. They are supposed to be derecognized. They should no longer be reported in our statement of financial position. Okay. Next would be advance payments to purchase orders. This is not in relation to our trade class. This would be considered as a advances to suppliers. Okay, but this would still be considered as a current receivable, but just not a trade receivable. Advances to subsidiary, as what we've mentioned before, will definitely be classified as a non-current asset and definitely also not related to trade. So it's not part of your trade accounts receivable. Customer accounts reporting credit balances arising from sales returns. As what we've mentioned, class, credit balances in the receivables should not be charged off against other receivables, but instead it should be reported as a liability. This will be reported as a current liability class. Okay, definitely not part of our trade accounts receivable. Trade accounts receivable in the amount of 3,500,000. Obviously, that would be the main source of our trade accounts receivable account. Subscriptions receivable due in 30 days. We've mentioned before that if a subscriptions receivable is expected to be collected within 1 year, it will be reported as a current asset. If not, it would be a deduction to your share capital, but specifically to your subscribed capital class. But uh, even though this will be reported as a current receivable or a current asset, this would not be considered as a trade accounts receivable. Okay, so it does not mean, Klasa, if it is a current asset, automatically it would be considered as a trade accounts receivable. You will have to take into consideration the nature of the transaction that gave rise to such receivable. Okay, trade installments class, obviously this would be part of our trade accounts receivable. However, okay, only those that are considered to be uh, uh, currently maturing class. Okay, or this is not even in due 1 to 18 months, including unearned finance charges in the amount of 850,000. Okay, so out of the 850,000 class, only the 800,000 will be included in our trade accounts receivable, because your uh, interest income will not be considered as part of your trade accounts receivable. Okay, it arises from a financing activity, definitely not part of your principal operations. So out of the 850,000, uh, it would be 800,000 that would be included as part of our trade accounts receivable. Trade accounts receivable from officers class due currently, then definitely part class because A, it states that it is a trade account receivable, and B, because it states that it is due currently. So the entire 150,000 will be part of our computation for trade accounts receivable. Next would be, or the last item here would be trade accounts of which post-dated checks are held and no entries uh, were made on receipt of checks. Okay, so the issue here is whether or not it is still correct for us to consider these items as a receivable. We already received checks in payment of this receivable. The answer is yes, class. This is still a receivable because uh, the checks we have received here as are post-dated checks. So it's as if these receivables were not yet paid. Okay, the post-dated checks did not effectively settle the receivable. So at the end of the reporting date class, this will remain as a uh, trade accounts receivable class. Okay, you will not yet recognize this amount. So out of everything class, we'll have our accounts receivable in the amount of 3,500,000. Uh, the trade installment receivable in the amount of 800,000. The accounts receivable from officers in the amount of 150,000, and accounts on which post-dated checks are held in the amount of 200,000 because they will remain as a receivable. So total would be 4,650,000. Answer there would be alpha. Okay. 4-12, Faith Company provided the following information relating to current operations. What amount should be reported as current receivable on December 31? Okay, so accounts receivable, January 1, 4 million. Accounts collected. Okay, the problem here, class, is that we need to determine the ending balance of our accounts receivable. And normally, the two most significant items class that would affect the balance of your accounts receivable would be number one, credit sales, sales on account, and number two, collections. Okay, the problem tells us how much the collections are. 8,400,000. We are also given with our accounts receivable beginning of 4 million. That means we could actually determine the ending balance of accounts receivable if only we also have our sales, particularly our sales on account or our credit sales. The problem here is we are asked in this problem to compute for ourselves the total sales. And where do we get that class? Where do we get that? Okay, based on the movement of your inventory. Okay, understand that if there are movements in your inventory class, then that means you are able to sell these inventories. And if you are able to sell these inventories, that means you will have sales. And if you will have sales, and if they are on account, then that will go to your accounts receivable account. So first thing we need here, class, is to compute for the total sales. Where and how do we get that? First is to determine how much inventory was sold. Okay, so first here is inventory January 1, 4,800,000 class. Okay, and we purchased additional merchandise or inventory in the amount of 8 million. So total goods available for sale class would be 4,800,000 beginning balance of inventory plus the additional purchases during the year in the amount of 8 million. So 4,800,000 plus 8 million will give us 12,800,000. Okay. And when we deduct the ending balance from the 12,800,000 class, that would give us actually the amount of inventory that was sold. Okay. So that should make sense. We have beginning inventory 4,800,000. We purchased additional 8 million. So throughout the year we had 12,800,000 total inventory. But at the end of the year we only had inventory in the amount of 4,400,000. So what does that mean? How much inventory was lost, or how much, and those lost or those inventory that are no longer part of our ending inventory are actually the inventories that were sold. Okay, so out of the total inventories that we had on hand class of 12,800,000, the only conclusion here is that we were able to sell uh, 12,800,000 minus 4,400,000 would give us 8,400,000. Okay. So if we had total inventory of 12,800,000 class, but we only have remaining 4,400,000 at the end of the year, the only rational explanation for that class is that we were able to sell 8,400,000 worth of inventory. Okay. So the question now is the 8,400,000 our sales. The answer is no, because the 8,400,000 is the cost of our inventories that were sold. And of course, we are selling our inventories class above their cost. We are putting up a markup on the cost of our inventories. And that is the purpose of the gross margin given in this problem. Okay, the total gross margin on all our sales was 4,200,000. So if the cost or the value of the inventories that were sold class amounted to 8,400,000, and the gross margin or the markup on these uh, inventories was 4,200,000, that means the total selling price of all the inventories that we were able to sell was 12,600,000. So the total sales class for the year is 12,600,000. So what do we do with the 12,600,000? Will that go entirely to our accounts receivable? The answer is no, because the problem tells us that we have cash sales of 2 million. So what does that mean? Out of the total sales of 12,600,000 class, 2,000 was a cash sale, meaning it was paid upfront class. Cash was immediately paid upon the completion of the transaction. So what does that tell us? If total sales is 12,600,000 and 2 million of it is a cash sale, so that means the remaining 10,600,000 class represents our credit sales or our sales on account, and that is the amount that will go to your accounts receivable ledger class. Okay, so the solution now here would be accounts receivable of 4 million plus credit sales. Okay, it's the credit sales that was very lengthy class to solve. So 4 million beginning accounts receivable plus uh, 10,600,000, that would give us total debits in the amount of 10, 6, 14,600,000, and then deduct collection of 8,400,000. That should give us 6,200,000. So the answer in 4-12 would be Bravo class. What amount should be reported as accounts receivable on December 31? So what happened here? We have merchandise purchases for the current year, 7 million. Merchandise inventory on December 31, 1,400,000. Collections from customers, 4 million. All merchandise was marked to sell at 40% above cost. All sales are on credit basis, and all accounts are collectible. Okay, so basically the same concept in the previous problem class. Okay, we just have to determine our credit sales. Okay. We do not need, unlike 4-12 class, we started with the beginning balance of our inventory. Here, we do not have to start with that class because our beginning balance here is zero. How do we know that the beginning balance of our inventory is zero? And even for our accounts receivable as well, because the problem tells us that this is the first year of operations class. So everything here would be the total already for the year because all beginning balances would be zero. Okay. So total merchandise purchases for the current year is 7 million. But at the end of the year class, only 1,400,000 inventory left. So what does that tell us? That we were able to sell inventories with a cost of 7 million minus 1,400,000 will give us 5,600,000. Okay, and unlike in the previous problem class that we were given the absolute amount of the gross margin of the markup, here we have to solve it for ourselves. So if the cost of the inventories that were sold us is 5,600,000 and the markup is 40% above cost, so we just have to multiply 5,600,000 times 140% or multiply it by 1.4. Okay, the goal here is to add additional 40% from the 5,600,000 class. So that means our sales for the year was 7,840,000. Now, do we have to deduct any cash sales similar to what we did in 4-12? No, because the problem tells us in this problem that all sales are on a credit basis. So meaning everything is a credit sale class. We do not have any cash sales. Okay, so the entire 7,840,000 class would be the amount of accounts receivable that entered the accounts receivable ledger for the year. And since we are looking for the ending balance class, we will have to deduct the collections. And how much was the collections for the year? 4 million. So that means the ending balance is 3,840,000. Therefore, the answer here is Bravo. What's the significance of the second to the last sentence here, class? All sales are on a credit basis and all accounts are collectible. What's the significance of the last phrase here? This tells us that we do not have to deduct any allowance for doubtful accounts because we expect that all the receivables will be collectible. So the amount that will be reported as accounts receivable will simply be the 3,840,000 without any deduction for an allowance for doubtful accounts.